Welcome to the StockMiner.com studios. I'm your stockminer, Brian Johnson, entering a shortened week of trading. September off to a huge rally. As you can see last week, starting on Tuesday, it was straight up the rest of the week. Our marks here were either to get short down below here or long right above here. We got the long entry. Took us a while. You can see it breaking down in through these areas. So there was a day or two in there where I was like, well, if you want to be more conservative, I'd wait for these breaks. Just so it did take a while, but you can see if you were patient, you were rewarded. Right above this area here was a fantastic place to get long, and as we broke through it and ran and ran and ran, you can see where we ultimately ended up for the week, right at the very top of the move. 10,450 seems like it's just stuck right here. 10,480 is a good spot to be looking for a little bit of overhead resistance. And no reason to think we couldn't run up even a little bit more from where we're at. We are extended here. I'd be very cautious with your long plays, but I certainly wouldn't discourage you from taking them. I'd be watching for something. I'd probably wait for a break over maybe 10,500 before I started looking. And then even then, I'd have a smaller size position cut out for myself, just using good risk management here, and then a relatively tight stop and see if it'll stick up over 10,500. And then I'd be moving it up every whatever you decide, every 30 points, every 25 points, every 50 points, whatever your risk management is. But I would have a plan in place to try to play this long. There is sure opportunity for us to go all the way up to here, believe it or not, before we stop. But I would be very cautious of that. These things tend to get front run, and I'd be cautious as to how high we will go. Let's watch and see where we open tomorrow as the markets come back to life on a Tuesday. I haven't seen any really necessarily bad news come out over the weekend, so no reason to think that at this point we're going to end up, way lower by any means. I do think the president's going to talk this week about his stimulus slash business slash whatever plan it is to try to rouse the economy, and that may lead for a little bit of a build up into that talk. One of those buy the rumor, sell the news type of things. It's usually how these things work out. I'd be very, very cautious once the president has spoken or is speaking. I'd be very cautious then with any more long plays if in fact this thing does continue up into Tuesday and Wednesday. All right, so 10,500 is where I'm looking at. You can see we stopped right at 10,447. There's a good reason for that. We didn't quite make 10,480. That is going to be, I think, a little bit of overhead resistance there. Hard to Elliott wave count this. This is just a huge mess, this whole area and through here. That's why we've been working off of technical analysis, which was short below here, long above here. The long worked out and paid off in spades if you were patient enough to wait for these breaks, either down or up. If you tried to front run any of these, you might have gotten burned, unless, of course, your pick was up. Then you were right on. But I would be rather you use good risk management. Break above here was your entry. So from an Elliott wave point, 1, 2, 3, maybe we haven't finished wave 3 up with a 4 pullback and then a 5 up yet to come. That's anybody's guess at this point. This is certainly reachable, either A, in this initial wave, or B, after a pullback and then a move up. Anybody's guess. Very, very hard to count right here. There are this is why Elliott Wave is so popular, I think. It really, really breeds discussion. So I'm just going to stick with what I know works for me, and that is I'm going to stick with my technical analysis and use that, obviously, as I always do, first and foremost. Up and over 10,500 is what you're looking at here for a long in the markets. Taking a look at the daily here, you can see why we stopped at 10,447. At 10,451 is the 200-day moving average. Look at this. Slice through the 50, slice through the 20, run right back to the 200, and stop. So this is a very valid reason as to why it stopped where it did on Friday. Makes sense. We could gap up above that and run a little bit further, or we could start our pullback here. I'd be watching this area, of course, very closely on any kind of a pullback. Anything below 10,200, sure, maybe you want to take a little bit of a short, but I added in this lower blue line here. That is now the one to be watching to the short side. A break of that blue line, and then ultimately a break back below here, I still think are opportunities for really good shorting shorts right down in this area here. You're going to hear people talking about this head and shoulders here. Here's a shoulder, here's a head. Now it's making a right shoulder. You know what? It's just all about what bias you are. If you're bearish, of course you're going to see this. this head and shoulders pattern forming. If you're bullish, you're going to see an inverse head and shoulders pattern forming. Right in through here, there's an inverse head and shoulders that I could probably pick out and make a big deal about, but it's just not worth it. Just play the TA. Wait for breaks of these major levels. That is where your trades are at. NASDAQ on a 60 doing the same thing. Broke the big blue line last week. Ran straight up into some overhead resistance here. Now we've got some more up here at 1900 or to the downside. I'd be watching those moving averages at 1842. Put those on your charts coming into the new week. 1900 as well on the daily, followed by 1920-ish or so above that, with the 1824 to 1830 mark being, of course, should be strong support on the way down. From a weekly perspective, this is very, very choppy in through here, but this is another place where you could find an inverse head and shoulders pattern if you want to be bullish on the markets. All these patterns are found when you, in most cases, are found when you're looking for something that you want it to verify. I'll find a head and shoulders on the daily because I'm bearish. I'll find an inverse head and shoulders on the weekly and go with that because I'm bullish. Do you see how that works? Wait for more major breaks. We get back up above 1920 and especially 1940-ish on the NDX, it could be game on for the bulls, quite honestly. Really, this has been a really hard run. So we'll see if we consolidate for a little while or if it just decides to keep screaming upwards. But any pushes, hard pushes up and above all these levels really lend me to believe that it could be more bullish in the short term rather than more bearish. Moving on to the SPX on a 60-minute, here's that big break of the blue line running right up into the 1105 mark, one of my overhead resistance levels. Don't have it marked here, but between 1105 and 1108 has always been one of my levels to be watching. Above that 1115 and then on up into the 1130-ish mark. This is the same type of scenario. We get breaks to the downside. I'm watching 1090 and ultimately 1075-ish or so down here for support. Up above us, really 11:15 and then 11:30 to the upside from a daily here. Another one of these inverse head and shoulders, blah, blah, blah. Coming up into 11:15, which is the 200, and then 11:30. It breaks above 11:30 make for good conservative long plays where I think back below about 1075-ish, 1070 or so might give you opportunity for a little bit of a short play here. But we're going to want to be cautious coming into the first few days, and let's just let the market settle down, decide where it wants to go. Same thing on a weekly, back up into these moving averages, 11:30 being the place that the bulls absolutely want to take back. In the bigger picture. The VIX on a daily is way down, as you can see. If you want to put this into a TA perspective, it is in a falling wedge, so the VIX people, or those that are bearish, are really wanting this lower line to hold if we end up getting down there. From a weekly perspective, same thing here. Huge, huge drop last week of 13% overall in the VIX, looking for pushes back into the 18 to 20 mark on a weekly basis. Apple on a 60-minute, you can see it getting over these two blue lines last week and really screaming its way upwards. Now that it's reached these levels, you want to be watching here 260, 260, 250 on a pullback. It's these moving averages definitely here, especially this 248-ish, 249-ish level. You'll want to be watching that level very closely on any kind of a pullback. But Apple, once again, as the markets get strong, Apple got strong. It was very, very lagging in through here, but it looks like it's back on course again to move quickly. If, in fact, the markets do continue to move up, breaks back up and above, and now a close above the 20-week moving average, put it in good position. If it'll hold up in this area for one more attempt at this 280-ish mark. And yes, it could reach it. It could make that mark, so we'll watch that closely. Back below 240, still my level to be watching to the short side. FAS on a 60-minute, also wanting to push this 21, about 2175-ish mark. Anything up above that could take you back towards 2250 or 23. Not a bad play there. And you can see the larger overhead area being right up here around 24. Will we reach that all at once? Possibly, but I would certainly expect a pullback sometime before we get there. If we reach this area up here without any kind of a pullback, I have to really start looking at the bullish idea in the bigger picture at that point. FAZ on a 60-minute, also after breaking down through here, just fell apart, coming back down into the 1350 area. Any breaks below that, I think it's $13.20 to $13 on a good short. You want to take this long, I'd be very cautious. You're going to want to intraday trade this, as we have been for a long time. I think breaks below some of these levels here, especially this one. Once we got this break below the 200-day moving average and below 16, started to fall below this was your biggest opportunity to hold overnight for a day or two. But now I'd be very cautious holding. I would want to certainly look more at the intraday trades on those as opposed to the swing trades, which is what I usually recommend with those 3-time ETFs. That'll do it for today's video. Tomorrow should be interesting. We'll see where we open. Not expecting anything too big. If we do open down a little bit, not like 15 points, but down like 5 points or 3 points, I really wouldn't be too stressed if you're bullish on this market, not at least not in the short term. That's not really that big. All it's doing is resetting some indicators and preparing for the next new week of trading, but it's certainly not devastating to the markets to open down tomorrow 3 to 5 points. That's for sure. Considering that we've run up, 40 points or 60 points or more in the SPX. So, big moves. And I will be back with you again, as always, tomorrow.